Hello traders, welcome back to my channel. Okay, this will be the continuation of the binary option course trading series. Okay, so today I would like us to talk about gap up and gap downs in the market. Okay, so if you are trading the binary market, the option market, the forex market, etc. There are times when you are going to see strong buying and selling force in the market, which will trigger the candlesticks to forcefully go up or forcefully go down, depend on the market situation. So if you are seeing a strong buying force in the market, you will see a gap up, and if you are seeing a strong selling force in the market, you will experience a gap down. Okay, so and a lot of times if you are seeing so many gap ups and gap downs, then it's a sign of a bad market. So for example, this is the current market situation, this chart. Okay, there is a round number here. Let me draw a horizontal line. Okay, that's a round number, you can see clearly there. Okay, all right, so market is respecting these round numbers, as you can see. After breakout, the market reverse again. After breakout, we are seeing reversal. Now the market is at the same level again. Okay, so it broke this round number, so we are going to expect the market to reverse after breakout. Now what happened here? You will notice that this bearish candlestick closed exactly at this area. Okay, but there was a gap down here. Let me draw. Look at the opening price of the bullish candle. You know, the market is respecting the round number, so after breakout we are supposed to expect a reversal at least for one candlestick. Now look at, after closing of this candle, there was a gap down to this area. The market didn't the buyers didn't enter exactly where the sellers entered, as you can see in this other scenario here. Okay, so as you can see at the top here, you see the sellers entered after where exactly where the buyers closed. Look at, okay, you can see, look at it, you can see where after this buying force here, you can see sellers entering. Now look at, compare it to here. You are going to experience this on a live market when you start trading. So look at, so this is what we call gap down. So if it happens in an uptrend, we call it gap up. Now the market gap down as a result of strong selling force, and it gap up as a result of a strong buying force in the market. So now we already know that the market is respecting that round number. After breakout, we are supposed to see a reversal, right? Now the market gap down. Now most of the times, if you are seeing too many gap ups and downs in the market, it is not advisable to trade in such a situation, because it is an indication of a bad market. But from the little experience I've gathered in this market, what I've noticed is that if the gap down if there is a gap down and there is a strong level of support, that is a buyer's area beneath it, just like the way we saw here, then the market will try to reverse. It will try to reverse. If the market gap up to a strong level of resistance, that is a seller's area, there is a gap up there, you will notice the sellers will enter into the market. The gap up and gap downs also work as trend continuation sometimes. If you are seeing a very strong bullish or bearish trend, let's say, for example, now this level, now you are seeing this, where the sellers enter from. For example, now this level, you can see these strong sellers enter from this level, right? And this bullish candle close at the level. Now, if there is a gap down to this current candle, this candle that is trying to open, let's imagine the candle opened somewhere around here. We'll use a horizontal line to represent it. Let's say the candlestick opened here, a little bit below the closing price of the bullish candle. Now, if you see situations like this, let me remove. If you see situations like this, let's say, okay, look at this, a kind of a small red candle now. Let's say this bullish candle now, after it closed, there is a little gap down to this level. You cannot expect sellers to enter. The buyers will still continue to close, to fill in the gap, or to close the gap, or to continue to the upside back, because the trend is uptrend and there is a buying force in the market. So this small red candle that opened at this area, that entered, this seller's entry here, imagine after the closing of this bullish candle, there was a gap down. The candle closed here. Remember, bullish candle, the candle will open below and close above. Now, after closing above on this horizontal line I drew, now let's say due to buying force, because we already see here is the seller's area, seller's entry. We saw these two sellers entered at this area, and then we are expecting sellers to enter from this area. The market must fill the gap before sellers will enter. If there is it has already filled the gap. Very many times in the market, I've noticed if there is a gap down, sometimes the market will try to fill the gap. Sometimes it will reverse. So it just depends on the situation. So like I told you, if you are seeing too many gap up and gap downs in the market, it's better to avoid trading at that time, because it is a sign of a bad market. So back to my explanation. So many times, if there is a gap down, observe the area. Now we already know that after breakout we can expect reversal of this round number, right? Okay, let me remove the lower trend line, so horizontal line, sorry, so we can get this explanation straight. Okay, this horizontal line is a round number. We can say market is respecting this round number. Now after breakout, we can expect the buyers to enter, because we are seeing similar scenario here. After breakout, the market is reversing. So, and we are already seeing this, we are in this situation, we are seeing buyers entry already in this situation. So we can expect buyers to enter after breakout, and this is a very strong candle. A very strong candle that is a sign of reversal. A reversal sign. Now, we already have it in mind. After breakout, the market should at least reverse for one candlestick before the sellers may try to enter again. Okay, so now you now see a gap down. Look at the closing price of this bearish candle. The market is supposed to open exactly where this candle closed. That is how candlesticks are supposed to form, but we now see a gap down to this area. Now, despite that there is a gap down, there is a selling force in the market. It doesn't mean the market will continue, despite the fact that you are seeing a gap down and a strong bearish momentum. We already know that this area is a buyer's area, as you can see clearly. So I'll draw again. We know that this area is a buyer's area. and a strong buyer's area. So you now saw a gap down. Look at the candle close exactly like I told you yesterday. If there is a breakout candlestick, check the chart very well if there is a previous level. Now this area, it is a breakout of that round number, and here we are seeing buyer's entry already, so it is a buyer's area. So this candle closed exactly at the buyer's area, even though there was a gap down outside. Look at this candle, very strong bullish candle opened outside below the buyer's area, you can see, but the buyers will still enter because this is a buyer's entry point. So if you see a gap up, check the level. If there is a previous resistance level there, a strong seller's area. If there is a gap up, the market will reverse. These buyers will enter if it is at a level of resistance. If there is a gap down to a strong level of support, the buyers will enter into the market. So if you are trading on a live market, you will see sometimes due to buying force, you can see the candle will jump up and change their opening position, opening price, and it will equally jump down and change their closing price. Okay, now if you are seeing example, now this bearish momentum here, let's say there was here is a previous seller's entry and you saw a gap down. If the market will get to this area again, let's say you are seeing a buying pressure in the market will get to this area. Those gap up and gap down usually act as levels of support and resistance. If there is a gap down in a strong downtrend, let's say there is no buyer buying, there is no candle, there is no green candle here, it is a complete red candle, complete bullish momentum, there is no green candle. Let's say in the place of this green candle you are seeing a gap down, a selling force, and then the bearish candle continue. Whenever the buyers are entering again, when they reach that level, now you may expect the momentum of buyers to continue, but because of that gap down, the market will respect that level and the sellers will enter again. So if you are in a live market, you can experience this. I would have taken some screenshots. I noticed that happened over the counter market last weekend. That is the popular OTC market. It happened both in real market and on live market. The candlesticks are the same. Look at it. Even if you change this to a 4-hour time frame, the rules of the trading still remain the same. There is no difference. The rules of technical analysis, be it a 3-hour candle, a 4-hour candle, it doesn't make any difference. Let me change it to a 4-hour chart, a 4-hour candlestick. Each candle here represents 4 hours. And what is going on in the 4-hour chart? Okay, good. Now you can see the 4-hour chart. The movement of the market is still the same. Look at, there is a strong selling pressure in the market here. You can see once the buyers again get to that level, again the market try to respect the level because this is not a direct buyers entry. You can see sellers in between, so this is a weak momentum of buyers. You can expect buyers to enter whenever they get to that same level again. You can wait for a confirmation candle. After this, seeing this first red candle, you can go with the next candle as a confirmation candle. So be it the 4-hour time frame, 1 minute, 10 seconds, yes, it is the same thing. The candlesticks are the same. There's no difference. You just need to know how to analyze the market. That is all. Okay, so back to our topic: gap ups and gap downs. The gap up will normally happen in a strong buying force market. Whenever there is a strong buying force, and then the gap downs will equally will happen if there is a strong selling force in the market, just like we saw in this example. This strong sellers entry, there was a gap down. So if the gap down is there is a gap down and then there is a strong level of support there, the market will reverse. It will respect that level and reverse. If there is a gap up to a strong level of resistance, look at the resistance level now is a very strong level. You can clearly see the sellers are entering from the same level. You can see. So if there is a gap up to this level, let's say this buyer candle now close somewhere around here, exactly at the entry point, then or below the entry point rather, and there is a gap up to exactly where the sellers enter from, a lot of times the sellers will enter into the market. So like I was saying, the gap up and gap down happen in two different ways. For example, now this is a strong bullish momentum. If you are seeing a very strong bullish momentum and there is a gap down below, sometimes it will continue to go up if there is no level of resistance. It just work like the same reversal candlesticks and continuation candlestick, or the hammer, shooting star, the harami, the engulfing, piercing, and whatever. All of those candlesticks, doji candlesticks. So it's the same thing. If there is a gap up in a strong bullish momentum, a lot of time the market will continue its trend. If there is a strong bearish momentum, there is a gap down in the candlesticks, there's no level of support or resistance, a strong bearish momentum, there's no strong level of resistance, the trend will continue. But if you are seeing a gap down the way we saw here in this example to this level there, and there is a strong resistance, support, a bias area, the bias will enter. As you can see from here, we are seeing bias entry. From here, strong bias entered again. Once the market gets to the same area, the bias will enter. So you can check this on your live market. You can practice it on your live market. The gap up and gap downs, you cannot force them to come out, but if you have been on the market for a very long time, the time will come you will definitely experience it. It happens almost every day. So like I told you, if you are seeing too many gap ups and gap downs, it is a sign of a bad market. The market is not good. And then if the gap up in a good market like this, you are seeing a gap down to a strong bias area, a resistance, a support level, after seeing a bearish momentum and a breakout already, get your confirmations. Like here now, I went with buyers here. Even though this is a demo account, this buyers enter here. These are my confirmations. The upper horizontal line is a round number. The market is respecting the round number, as you can see here. After breakout, we are seeing reversals. Okay, now you are seeing a very strong breakout. Again, the candle closed exactly at the bias area. There is a breakout and the candle closed at the bias area. After breakout, you can expect reversal, and the candle closed at the bias area, a support level. And at the support level, we are expecting buyers to enter into the market. So these are my confirmations. Buyers will enter into the market. As you can see, a strong buyers entry. Okay, so before you place any trade, you need to find your reasons. If you don't have any reason to take any trade, there's no point taking it. Yes, there's no point taking those trades if there's no reason. So it's not that you are not going to lose. You may loss in the market is a normal thing, even if your analysis are correct. But at least some good winning ratio compared to your losing ratio will make you to be in profit at the end of the day. Okay, so I hope this concept of gap up and gap downs has been clearly understood. Those are the only gap up and downs that happen in the market. There is a gap up in a strong bullish momentum, it will continue the trend. If there is a gap down in a strong bearish momentum, it will continue the trend if there is no level. But if there is a gap up to a strong level, the market will reverse. If there is a gap up to a resistance directly, it will reverse. If there is a gap down to a support like this, it will reverse. If this bullish candle closed here and there is a gap down below, we already know there is still some gap for the market to fill. The market will still try to fill the gap again. The market will still go up. If the opening price is below the closing price of the candle, because normally market will always fill the gap before they continue their trend to either reverse the market or continue. So thank you very much. Have a nice day. Okay, bye for now.